Howdy folks. Today is a simple video. I'm gonna look at Zillow, I'm gonna look at Redfin, I'm gonna look at Opendoor. Opendoor is the company that is going to go IPO through Chamath. Opendoor's stock symbol right now is IPOB. Really, this is the pitch for IPOB and Opendoor. It's not a pitch for Zillow and it's not a pitch for Redfin. So you know what you're getting into. So I was looking at the companies to see what's going on. I'm looking, it's a Zillow. They own Trulia, they own Easy Street, they own Hot Pads. This is just the easy numbers you can pull off the website. They say they have 118 million monthly users and they have data on 110 million homes. That's impressive, that's good. So with Zillow and Trulia, of course, they'll do financing and mortgaging the properties. They'll make you the instant offer. That's really what we're getting into, the instant offers. Zillow, of course, has the agents listed. It has the relationships with all the agents that are advertising, and it has the lead generations. It has good money coming in through the sales side, the marketing side. Next, we look at Redfin. A lot harder to get at this data. It's not just easily available. But once you figure out the website, you get they have 80,000 customers to date. They're a much newer company. They're not advertising apples to apples numbers here. So they're saying they have 47 billion in home sales. And that doesn't really make too much of an impression because if each house is, I don't know, $500,000, 2 houses is $1 million, 20 houses puts you at 10 million, 200 houses puts you at 100 million. So 2,000 houses, that puts you at $1 billion, 47 billion. It's not all that many. Anyway, Redfin is kind of configured similarly to Zillow. They have the website, they list the properties, they do the sales, they do the transactions. They have their own agents. I believe we have somebody on the internet. His name is Meet Kevin. I hope you know of him. I'm sure you're not coming to this video to me without knowing Meet Kevin. Anyway, so Kevin said Purple Bricks is closed. I didn't look into that. I believe him. Their advertising has disappeared. So why am I interested in Opendoor over Redfin and over Zillow? Well, first of all, I looked into their CEO. Second of all, it's a pre-IPO. It's a SPAC. So it's already got about $10 billion in sales. Its CEO already has experience through Trulia, has already been in investments for a long time. Also, Chamath has a lot of money put into the deal himself. It kind of gets a little bit complicated for me with Chamath because IPOB is the second SPAC from Chamath, and then there's IPOA. IPOA was that Virgin Galactic. I'm not a fan of that one. I don't like that one at all. I don't care about space tourism. It's not an industry or a niche, whatever you want to call it, that I'm concerned with. It's not something that I see being a product that can be utilized. Why is Opendoor better than Virgin Galactic? It lies in software. It lies in modernizing processes that have been. It's eliminating people. It's eliminating it's eliminating basically wasted time, wasted resources. They're going to be doing a lot of the heavy lifting, where right now you're relying on your agent's relying on another person. They're going to pull all of that into their community, and they're going to deliver a product that's end to end. Redfin is doing it, so is Zillow. What makes this a better place to invest? You can invest in Zillow, yes. You can invest in Redfin, yes. And you can invest in Opendoor, IPOB. All of them are going to probably do fine. Right now, the total market that's available is pretty small for all of these. They haven't gotten the ball rolling, and IPOB is joining the party. It's the last one to join the party. It's the smallest one. As the party grows, it's a new industry. It's a new segment. It's gonna have a better chance at growth. How can I put it? Back when McDonald's started, back when Burger King started, back when, I don't know, KFC started, I don't really care. Any of these fast food places, they all started with one or two locations, one or two chains. They all grew. Once McDonald's became established, the other ones still had room to grow. Opendoor has basically just started. They have the most room to grow. They have the largest chance, the largest opportunity to take from Zillow and to take from Redfin, even though both of them still have a huge runway to grow themselves. Talking about Zillow and Redfin and Opendoor, Opendoor is probably going to give you the best upside. I got into Opendoor, I think under 16 bucks a share. I think it's over 18. It's not going to make a big difference. This could easily be $100 share. We see Zillow bouncing up and down in the share price. Redfin's bouncing up and down too. Opendoor is new. So what to expect with Opendoor? It's going to be crazy. Opendoor is going through the route of Nikola. But Nikola didn't have anything, and Opendoor already has 10 billion in sales. So that makes a difference. So once it merges and becomes Opendoor, that's going to pop the price. I'm in it for more than what I want to be. I'm going to sell half my position as soon as it merges. Once all of the warrants come out, once all of the other sales and positions come out, where it's going to dilute Opendoor, because they're going to want to raise money, they're going to want to get into more markets, they're going to want to compete more, it's going to dilute. I'm still going to hang on to half of my position. Once I see all the warrants and everything else comes out and it evens out, I'm going to go ahead and buy back in. I'm probably going to get a new cost basis. It's going to be higher cost basis. It's going to be the Opendoor stock. It's not going to be IPOB anymore. I am glad I'm getting in right now, and I'm going to be happy with this investment. I did a similar play with SHLL, Turquoise Acquisitions. I got in. I got a position that was a little bit more than I was comfortable with. I knew that it was going to perform similar to Nikola. As it got closer to the merger date, the stock price got higher and higher and higher. I got in at 17-ish. I sold at 30. I sold at 35. I sold at 40. I sold at 50. I sold at 55. I'm actually out completely. I'm sure Helion will do great. I'm still waiting for some numbers to come in. I'm still trying to see how the business does after the merger, after all of the dust settles, let's say. Because I got in so early, I was able to triple my money and get out altogether. With Opendoor, I might get out altogether depending on how crazy high the stock goes based on the hype. Right now is a good time to get in before it merges, before any of this information comes out. Chamath himself has put in a lot of backing into the stock. Opendoor will give you a good return. It'll give you a fantastic return. Buy a position that's a little bit more than you're comfortable with, sell half of it, and let the other half ride. My plan. So I got in at 15. I have about 100 shares. That's about $1,500. My portfolio is a lot, way larger than $10,000. So $1,500 is not even 1% of my portfolio, but I'm gonna take care of my position as it's a good position. I have a huge position in Tesla. I'm not touching it. It's fine. I'm gonna play with this. This is gonna be my engagement, my joy, my fun in the stock market. I'm gonna let this double to 30. I'm gonna sell maybe 10%. I'm gonna see if it hits 45. I'm gonna sell another 10%. I'm gonna see if it hits 50, 55, 60. I'm gonna bring my position down to 50%. Once it merges, I'm gonna see if it goes any higher. I might sell another 25% of my total 100%. So I'll have 25 shares. I'm gonna hang on to that last 25 shares and I'm gonna ride it out. If I don't have a stake in it, I'm not gonna pay attention to it. So I have to hang on to that 25 shares to see what's going on, to keep following the company. It's very difficult to keep me engaged with a company if I am not personally invested in it. I put a new starting clip. I hope that worked out. I put a new closing clip. I hope that worked out. Please like, subscribe, comment. Let me know what you want to talk about. I'm probably going to do a video next about how I do options, when an option is a good idea, when an option is a bad idea, how to determine if it's better to buy an option or if it's better to buy a stock. It's not simple. It's not something that can be explained in a quick fashion. It's gonna maybe be a video I have trouble getting out correctly, but I'm gonna try. Hopefully I can get you something that you understand. If you are having issues with that, you can let me know. I'll get you more information about that. Anyway, IPOB, I'm in it. I'm liking it. I'm loving it. Let me go ahead and address this too while I'm at it. Hopefully you watched the whole video rather than cutting it short. I'm not into DraftKings. I don't care about gambling at all. Yeah, I'll go to the casino. Yeah, I'll play roulette. When I tell people about my strategy in the casino and how I play roulette, let me know if you want me to give you that in another video. I'll do that too. People are like, oh, you're boring. You suck at gambling. I'm all like, yeah, I probably do suck at gambling because every time I've done so, I've come up. I don't really go to a casino and leave with less money. That doesn't happen with me. But yeah, but roulette is chance and this is somehow it works out for me. Yeah, I've lost on roulette too. I can't say that, but more of the time I've won and less of the time I've lost based on my specific strategy. I can go over that with you guys. So anyway, I was talking about DraftKings. I'm talking about Golden Nugget. These aren't something I'm looking at. I don't care. It does not interest me. I'm not into gambling at all. I don't care about sports betting. I don't care about the industry. I don't care about the rules. I don't care about the regulations. It does not pique my interest to look into these companies. I don't want to research them. I don't want to buy into them. I don't want to support them. It's like telling me to buy cigarette stocks. I don't care about smoking. It's like telling me to buy stocks in companies that I don't know, I'm trying to think of another industry that I really don't care about. Anyway, if I have no interest in it personally, I'm not going to get into it. I love real estate. I own real estate. Right now, we're in this property. We're converting the garage into an ADU. This is California. We're probably going to get about $1,200 in rent. I have another property. I just got it rented out. That's good. So yeah, I have money in the stock market, but it's not all there. With me specifically, a little bit more about me, so you know who I am. My goal, I'm not 40 yet. Once I get to 40, I want to have 3 properties, and if I can, $1 million in the stock market. That'll be fine. I think I can do that. I can do both. I'm going to be taking out 5-10% from my stocks. I'm going to be purchasing my properties, and that's going to be it. And then I'm going to keep building that stock portfolio so I could probably retire by age 40. That's the goal. That's the plan. And you didn't need to know. It's none of your business, but now you know. Yeah, I don't intend to work till 60. I don't intend to do a whole bunch of stuff. I intend to grow myself. I have several streams of income already. And if you're interested in finding out more about those, we'll go ahead and talk about that. I'll also do another video about how I think the ideal $10,000 stock portfolio should look. That's probably going to be coming out in the next couple of days. I'm not sure. Anyway, like, share, subscribe. Let people know about me. Let people know that, hey, maybe I'm pointing out things that they are saying too, and then we share similar thoughts and minds. Maybe they'll like my channel. Anyway, see you guys. Bye.